Hey guys.
Let's get an audio check from the audience. We don't have anybody on just yet.
No. Where's my... Yeah, it's just you and I. Oh, no,
Yep.
Ash is in. Good morning.
Okay, we got 2 views. Good morning, Andreas. Can you hear me?
You can.
Audio good? All right. So let's get this party started. Let's get this one up. All right. Remember, we're above previous month 50%. We're above NFP Friday. Taking out previous month highs. We expect the end of month higher. All right. So that would be right there. All right. So we're looking for the low of the day scenario between 9:30, or shoot, sorry, I was just looking at data since 4. That would be from 5 o'clock to 11 o'clock, right? Coming over to the weekly chart, as you can see, we're heck of compressed, right? Over the last few weeks, we're still inside of previous week, which is fine, but for this month, the highest we've moved off of this fixed variable is 2.32, right? Telling us that the market isn't too worried about any news catalyst. It's just sitting here operating normal. Right? The moment we get between 2.5 right there and 5%, which is all the way up here, right? Then we can start thinking about a monthly slowdown. Right now, we can't lock this in as low of the week because we swiped above Sunday, but we can't swipe above Tuesday. So we still have to account for the low of the week, right? If we were above here, then we could lock this in and say, we could say like the low of the week was established on a Monday. Oh, wrong one. We would say low of the week's on a Monday. However, we can't do that because the alert happened, but the confirmation didn't happen. So as of right now, right, these are the 5 most highest probable outcomes for the week, right? One's going up. The orange line is showing that we may take out previous week's highs. The purple line shows that we may take out previous week's high today and then drop, take out previous week's lows. And then the other 3 are just drifting lower, and the actual move happens on Wednesday and Thursday, right? So with that being said, that's our momentum, our higher time frame. Moving on. Right, now we're going to put in our Asia variables. Right, remember the first step is put in Asia variables and London variables. And just so you guys know, today we're officially transferring over to the new times. Right, so the sessions that we're going to be using, Asia will be 1800 to 1930 will be the range. And then what we do from 1930 to 0229 will be the variable. For London, 2:30 to 3:30 will be the range, and what we do until 7 will be the variable. New York AM will be from 7 to 8 will be the range, and what we do until 11:29 will be the variable. New York PM will be, the range will be 11:30 to 12:30, and what we do until 16:15 will be the variable. Right? So when we go to our data, which this is available well, this is not available, but we're looking at November 1st, making it available for purchase, and it won't be that much. It'll be $80 a year, my annual subscribers, and then whatever Costa decides. Did we do a reset button on this one
Yeah,
yet?
bookmarks.
Bookmarks, that's right. So we're starting with 4,180 days. We can see that Asia went short out of its range, right, until 230. So this would be a short true. Remember that this area here has over a 90% probability over the last 2,000 days of being returned to. Just like yesterday, it tried fooling us with this low of the day. All right, so we're going to go over to our data set, and we're going to go direction, short, and then true, right? Because that's what Asia did. Now looking at London, it went long out of the range and then broke to the other side of the range. So this would be a long false. All right, so now we go over to our data set. We go long, then we go false. All right, and those are the two sessions that has happened so far. So we went from 4,180 days to, he has been busy, to 176 days, and much appreciated. So now, real quick, we're going to come to this London price model. We're going to copy it over, and we're going to paste it on our charts. Right, and you can see that we went up. Like if we zoom this in, this is 230 to 330 to 7. We can see that if this is the low structure 2 of the 12-hour section, the Globex low, there's a high probability for us to take that out. Right? So we're going to put this right here. Just like that. One of these days, we'll figure out how to do this to scale.
There
But
might
for now,
sorry.
yeah,
I was just going to say exactly what you've done there, Mickey. Put the lines of the vertical.
to separate them. Yeah, that's what I'm going to start doing. Okay, so now we're going to go to the low of the day, right? We can see that right here is the bulk of the low, right? And it really starts to increase. Around the top of it is at 0.6. We come down to 0.1. So we're going to come over here and at our Globex open, we're going to go down to 0.6, which we've already passed. So there's no sense putting that in. We can go 0.7 to 0.1. Let me see that again. So this little cliff right here goes to 1.110. All right. So now let's look at this data a little bit more. All right. So this would be considered 1800 open-end price right here on the right, Globex. And this is a percentile of how many times based off of the Asia and London variables that we put in that it went this far. We know that these are anomaly days. Anything over 2% are anomaly days, right? This means that we went down 2%, 3%, 3.5%. We don't have a news catalyst to push us this far down. So we don't anticipate that. Right? We can see it at the top from 0.70 to 1.1. And would you say the blue line was again? The mean?
Median.
The medium. All right, so the midpoint. So we have already passed the 0.6 and the 0.7. We're already at around the 0.8. So we're going to say that from 0.8 to 0.10% down is where we can consider our high of the day. Or, I mean, a low of the day. Let me put that back.
Yeah.
And this will change based off of as we continue going and doing the workflow. And this also will change based off of what 7 to 8 o'clock does as well. Because right here you can see if we just leave what has happened so far on here, we start turning around at 7. Right here, we take out structure low, and then we start turning around and going back higher. That's just without any of this. This is forecasted right now. Once 7 and 8 shows its hand, then we'll be able to put those variables in and just get more accurate. We can see right here that the highest with this, the variables that have been in place, this typically does the low of the day at the end of the day between 2:30 and 4. However, because right now we're assuming that we're putting the daily wick in the low of the day, we have to take, because London's below Asia and Asia is still left open, we have to consider this being the low of the day time frame. So we're going to put 9 to 11. Hopefully that makes sense. Give me 1 second. All right, let me put that up here. All right, so now that we did that, wish we could lock this in. All right, going back to looking at this. Right now we're going to put our higher day stats in. We can see that we put this up. We can see from 0.2 to 0.1, like there's this big cluster, right? So we're going to start it at 0.2 and for now go to 0.35, right? And this is why I'm going to show you it's important to do the whole process. Because that's 0.2 right there, whatever you notice. Then we're going to take out the high and the low of the day. I don't know if that's feasible, right? Considering we don't even have earnings or any kind of economic news catalyst to do that just yet. All right, so now we're going to carry on with our process. We're going to come back to that and look at it. All right, so now putting on our playbook, we see we put the Asia variables in, we put the low of the day in, we'll come back to the high of the day. Structure-based probabilities, all right. So we're going to put in previous day high. And we can see just based off of the Asia variables and the London variables, the previous day high right now has a 28% probability, right? Remember that New York 1, let's say it goes long and stays true, right, it's going to shift this,
Yeah.
right? Which, if I could, I would do this stream from 8 o'clock on, but I can't, right? As you can see that the previous day high goes from 60%. So between 7 and 8 and what we do after, you need to pay attention to that, because that time frame is the third node that allows you to really project what's going to happen in the New York 1 model. And then what's going to happen in New York 2 is based off of the 11:30 to 12:30, et cetera, et cetera. All right. So now we have 4 nodes that allow us to figure out what price is going to do, right? For now, right, we're going to take this off, right? And we're going to say, just based off of what has happened right now, this shows the probability of New York being New York 1 between 7 and 8 going higher. So we're going to put that in the scenario build as a variable, right? And this is something we're testing out and we're going to try out. Doesn't mean it's going to work, right? This is a new system and we're going to try different things until we can get it just right.
Nikki,
Yep.
so you still have direction as long on N1 variables right now?
Yeah, but even if I take that off and we just have what has happened,
Yes.
right? You can see that this comes up
Yeah.
and it has a false day, but we're going to assume that between 7 and 8 is long. We're just not going to put whether it's true or false. We're just going to put long and leave true or false in all, right? So it accounts for all the data sets, right? And we can see even with that, it goes long, it just stays above that 7 o'clock low, right? So now, because that's the most likely one based off of time of day and what the structure has shown. What's up?
No, I was just going to say we don't have the candles for London N1, N2. That'll be done next 24 hours.
What do you mean?
I have the data. So I haven't put the graphs in on London N1 or N2. We're only as far as time and structure right now on the tabs.
That's fine.
Yeah.
Oh, okay. All right. So with that being said, previous day high has 35, previous day low has a 38, right? And what that is indicating is that previous day low is going to get taken out, right? Like within the next hour or two, right? And then our job is going to be paying attention to that 7 o'clock, 8 o'clock range to see if we go true long or short false, right? Because if you think about it, we've already moved 69% of the range. So this is going to be a downtrending day, a trend day down, or we can anticipate a reversal in the morning session. All right, I'm going to have to stop moving this around. Does that make sense to the audience? Right, we can see right here that this is 6 o'clock. 6 o'clock is going to come down and take out this structure and more than likely this low of the day. And then we start tilting up. And if we put even if we take this completely off, let's put it to short real quick. You see that the reversal happens around 9:30 and all that, right? So let's just leave this for the pricing. Let's leave that like that. And we can see that the low of the day would happen at 10:30. And then this would be an actual low of the day at 4. All right, I'm going to confuse the shit out of people if I keep going on this. Right? So we're going to go long for New York 1, right? 0.60 is the highest low of the day to 1.9, right? And we've already put that calculation in. Let's
Yeah.
put this in.
Perfect.
So we're saying that this is kind of like the structure that we're expecting to see. This isn't to scale, right? For example, this would be like that, and this would be like that, right? So but we're just putting it down here to give us a baseline understanding of what's the highest probable structure in relationship to higher highs and lows and all that, right? All right. So now let's put our probabilities on. We see that previous day high has a 35, previous day low has a 38 between 8 and 12 o'clock. I think that's 35. Yep. All right. So now we're going to come up here. Previous 12-hour. This is the previous high, which has a 67. Previous day low has an 81. We already saw that within the pricing structure that makes logical sense, right?
Yeah.
So this, remember that's the 12-hour cycle from 1800 to 06 with the low and the highs. So this is structure 2. Structure stat 2, and we said that had an 81% probability of being hit after 6 o'clock. And structure stat 1 had a 67% probability. And that's based off of what Asia and London have done and where we expect New York to go. All right. So now we've done our structure-based probabilities right here. Now we're going to go to our time-based probabilities. We get Globex open. We got midnight. And we got settlement. All right. So putting this on Globex open right there. We see based off of what Asia and London have done. Okay, what is this, dude? Is this 58% or is this 54 count?
Hang on a second. I can get you that number. I did. It's an error on
Okay.
my. So it's 59%.
And so there's a 59% chance based off of what Asia has done and what London has done that we return to this Globex open today. All right, now putting in midnight.
They've done it over here as well, damn it.
What do you have for midnight?
72%.
Is that with the variables in?
Yeah, so I just want to double check that. I got 176 data sets. How many do you have?
92.
Ooh,
Remember, I went long and
you,
all for that, but that's fine.
yeah, I will
right.
sort that now long.
And then now let's put settlement in. We're going to go to the daily chart. We're going to hover over yesterday. We're going to look in the top right or top left where it says C and a price. That's going to be your settlement price. So 519, 519, 519.
62% with the right data.
519, 519. So that's going to be settlement. And what did you say settlement was? 62?
Yeah, 62. And I have a new number on Globex for you. It's almost
Okay,
there.
what is it?
New Globex number would be 63%.
So you see how we're building 63. You see
Yeah.
how we're building probabilities up here along with the probability, the high probability of the 1930 and 2030
Yeah.
being returned to you, right? That's still open right here, right? So we might not take out previous day low. We might do a turnaround reversal right now. Like what could happen is at 6, we could drop down into here, take out this 81% probability, reverse, and go higher for the day. All right, so we've done our time-based probabilities. We've done our structure-based probabilities. We've identified our low of the day zone. We've put in the Asia, London, and possible variables of what has happened along with the New York. Now we're going to do our projection-based probabilities.
You may want to do a little update on the midnight, because when I put those new numbers in, it went to 76% on our system.
All right.
So that increases, which gives more weight to what you were just saying, right?
Yep. And we're going to change this. We need to do our RTH gap probability. So
Yeah.
we're going to come over here, find the RTH. We're going to put the day of the week. We have 92. It's very important that you switch this back once you're done with it. Today's Tuesday. We're going to collect on Tuesday. So now we put in the Asia, the London variables, and the day of the week. And now we have true probabilities of that RTH gap, right? So right now we grab our fib. We go to wherever settlement is, drag it down, go to the template that you built, RTH, and then will you read all the percentiles to me?
Yeah, 25% is 71%.
Okay. 50%
Is 71%.
that's because we have a low data set.
Yeah, yeah.
All right. What's 75?
62%.
All right. And what is 100?
62%.
And would you look at that? 62% probability and 62% with that. That's fucking nuts. Okay, now with your data set, make sure that you go back and you deselect Tuesday and go back to 92 data sets, right? Now we're going to do our projection-based probabilities, right? Is this based off of what time frame?
This is from the end of Asia to the end of the day. So
I'm
2:30.
saying what range is it going, like when I put my projections on, is this going from 1930 to 2030 or is this going from 1800 to 2030?
1800 to 2030.
Oh, cool. So, or 1930, 1800.
To 1930. Sorry, I'm just
Okay,
going to
got it.
double check that.
I just wanted to make sure we got that updated.
Let me make sure as well.
Yeah. So we open up the vet, we put 1800 to 1930, we put Monday down, and then we have these standard deviations right here. Right, we can see that 5 just got hit, so we're going to be figuring out what -8 is. We can see it has a 15% probability of being hit.
Yeah, it's picked up the new time because that was a dynamic variable in the code. So it was just looking for that time when to trigger, and because we changed the times in the data structure, she did what she had to do.
So now, nice. We go to +1, right, which is at 20567. What's that probability?
+1 is 60%.
Thanks, man. Good work on this. You really crushed it. Come on. All right, 20607. And what's the 2.5 plus?
40%.
What's 5?
20%.
All right, now we can turn that off. Right, and we can see that we did the Asia-London variables, low of the day, structure probabilities, time-based probabilities, projection-based probabilities. Now we're going to deselect that. I'm going to come over here. I'm going to do our scenario build based off of London, distributions, etc., etc. Right? So now, before we go into scenario build, I want to put in the distribution. So turning the vet back on, we can see that the average weekly range is 761. We've moved 210 handles over the last since Sunday, right? So there's 27% of the weekly range accounted for. Average 10-day range is 273. We've moved 168. There's 61% accounted for today, right? So let's put that on. 273, right around there. 73, also known as 1.32%, right? So now, and that's anchored off of where we currently have the low of the day, which is right there, right? So now we're going to do Tuesdays, or actually, yeah, Tuesdays, 1800 to 230. We can see it on average moved 0.74, which we can already see that we had we did not stick to standard during this range. Would this be Monday? Yeah, so this would be Sunday to Monday. This would be, okay, cool. I figured it out myself. I'm a big boy. So that would be that. And then now we're going to do 230 to 730, which is 0.58. .58%, right? Which we have not met yet. So remember what this structure told us? It told us that we would swipe down, take that out, and then start coming over. So we're still expecting that last bit of push into the low of the day zone before we reverse. All right, so now we're going to put in 7 to 8, which is 1.31. 7 to 1130, 1.31%. And then now we're going to put in our final one, 1130 to 1615, which is 1%. It's 1.02%. Now we're going to turn this off. And we're starting to get a good feel, well, at least I hope you guys are, for what our expectations should be, right, for these different ranges.
Yeah.
All right, going back to the data. Now we're going to do scenario building, right? So we already know what New York price, fucking gnat, get out of my coffee. We already have a good understanding that if we are to put the low of the day in now, this morning, that we can expect a reversal to happen between now and 8, right? Right, we've already talked through that. That's what this kind of scenario would look like, right? We can even put New York price 2 in. It would look something like this. Right, now we're going to say that New York 1 would be a short. And if that's the case, I don't have to invert this, do I?
New York 1 is short. You'd have to invert New York 2.
So go over to visualization, go to y-axis, go to invert range. Right? So let's build out the scenario for this one. Scenario 1. We put in the low of day and New York 1 goes long. All right. For New York 2, for scenario 2, shut up, Jerry. It's not going to kill you. Listen, Jerry, one thing I'm working with 2 degrees on now that the dashboard is complete is we're going to build this because there's only like 25 people on TradingView that can do Pine Seed, where you synchronize databases with indicators, and he's one of them. And so what we're going to do is we're going to take this dashboard and we're going to feed it into the indicator. So the indicator is constantly putting the variables in based off of what's happening, and it's putting the boxes and these projections on it. But that's going to be a long way away. But that's going to be freaking awesome. I mean, I'm excited for that. I don't know if you're excited for that. I'm excited for this part. Shoot. Go short. So if it goes short, I'm so tired. I've been up. I didn't get any sleep last night. And I gotta work tomorrow. I mean, today. I gotta work today. Dude, I gotta sleep more. Jeez. I'm gonna crash. I probably won't be on stream tomorrow. Usually when I have bad nights like this, like I crash the next day. Fucking war. So this is kind of the structure if scenario 2 happens, right? Come on, take that out already. Come down here. See, now it's just teasing me with nonsense. Okay. So that is the scenario, right? What did we miss? I feel like we missed something. I definitely feel like we missed something. Oh, we can put high day in for scenario 1, right? So now that we have this, I'm going to put this back on long. That's my alert to get off stream and start scalping this range. All right, we can see that the high of the day really starts around 0.4 and goes to 0.71. Starting at Globex, 0.4 to 0.71. This is supposed to be green. .4% to 0.71%. And then we can see that, again, they both say that the low of the day or the high of the day will happen between 9:30. We're going to say that it happened one of them has to happen in the afternoon, one of them has to happen in the morning, right? Because of our location right now, we're going to say the high of the day will happen from 1500 to 1615. Does that make sense? These concepts look interesting, but look too much complicated. Hey, listen, Tanzio, I'll ask you this. Did you pull $4.4 million out of the market yet? Did you pull $8,000 out this month alone? Because if you didn't, you're not working hard enough to pull alpha out of the markets. I'm just saying, like, I've got the track record to prove it, right? At the end of the day, you don't have to do things the way I do, right? You don't. But the purpose of me being live is just to show a repeatable workflow process, aligning live price with historical data and, like sticking to it and trading your plan and mitigating the risk around your plan. That's all that I'm trying to promote here. Responsible growth and realistic expectations. I'm pulling my bank into the market. I like that. But listen, like, honestly, like, I just try to promote responsible growth and realistic expectations. And, it took me over a decade to even get to the level I'm at now, right? So with that being said, like, yes, a lot of this is complicated. And yes, it takes a lot of the members like a month to practice it over and over and over again. But eventually they get it. And then they need to build their own workflow system. They build their own workflow system so that they can confidently place trades however they need to based off of their trade plan and so forth and so forth. So this is scenario 1. This is scenario 2, right?
Sorry.
Oh my God, Jonathan, I don't use stop losses. I'm just kidding. I definitely use stop losses. All right. So looking at the live price, let's say right now we're expecting the low of the day, right? Right between 0.8 and 0.11 for scenario 1, right? Right now, what we have done is we've opened up a new H4, right? We're stepping above the 5-9 box. We're seeing, can we get above previous hour mid, right? Can we step above that and then find footing on this 5-9 box and continue high, going higher? We know that this low right here, structure stat 2, has an 81% probability of being taken out, right? So for now, right, if this thing goes without us to the upside, it's going to make me lean more towards, can we get signals? Oh my God, that's Sapphire Trader. You think I don't know your YouTube channel, Sapphire Trader? Come on, dude. Right? If we continue to start pulling up, right, and we don't take out this 81% probability, that's leaning me more towards the New York 1 going short, right? Scenario 2, right? We know previous day low and the structure stat 2 has high probabilities of being hit, right? I'm not saying we can't just rip, rally, and roar from here and just ignore this probability, because we absolutely can, right? What I'm saying is that the higher up we go, like right now, we are stepping above the previous hour 50%, right? And now we just need to see, does it have footing, or is this the draw? Is it moving back to wipe everybody out and then go, right? Remember, low day scenarios usually look like death and destructions with instant recoveries, right? So it'll be slow, 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 wipe out, and then recovery, right? Now, the recovery doesn't have to happen at the speed that the low of the day or the high of the day happen, but usually it will have a heck of a delta. The delta that establishes the low of the day or the high of the day, the rate of change will be faster than most of the other candles. And then the instant recovery, that's for you to figure out what you're going to use, right? I tell you guys, right, like we use 5-9 box in previous hour mid to see Did that take that out by one tick? No, it did not. Okay, I was about to say. We use 5-9 box and previous hour mid to see where momentum is going on the hourly chart, right? And change the characters around these high probability areas. So when we have a scenario like this, your best thing to do is just sit on your hands, because right now, remember I told you guys there's two types of risk. There's data risk and there's price risk. For me to sell down here, right, and I'm trying to capture, let's say, 100 handles, right, that doesn't make sense. I'd be at a price risk territory. Right now, with price being up here, now I'm at a data risk, right? Your job is to balance the two out, right? I would love to see this move into engage in longs or start building a position, right? If we had taken out these probabilities down here, right? So let me share this sync Globex, right? Sync Globex, right? And let me do this. Nope. Stop it. Dang it. Sync Globex. Nope. I just synced something wrong. Sync Globex, right? So I would love to see this kind of move happen if we had taken out this probability. This needs to be moved up, right? But because we haven't taken out this probability, now I'm at data risk and I have to sit on my hands and either wait for 7 to 8 to show its hand for which scenario it plans on going to, or for this to actually show its hand between 6 and 7, right? And then see this move, right? We don't. This is great displacement for what I wanted to see, 2 ticks lower. But that's how it is sometimes, right? All right. So with that being said, Sapphire Trader, when are you coming on here, dude? I find it very insultful that you haven't been on here yet.
Come on, Safa.
Do better, Sapphire. All right. So let me copy this. Any questions or anything like that? All right. If you're not part of the weekly newsletter, right, one thing that you probably have noticed over the last month that I do is I sit there the day prior and I collect research notes because, you know, I get free research from investment banks because I work there. And I just collect notes of what the consensus of all the research coming out is for the day. And I just collect the notes and take notes all day long. And I put them in this right here to tell you what you should be looking for. What's the most hottest topic that everybody's looking at right now. I don't expect anybody who's watching this show to be a macro investor or even a swing trader who trades companies, because like I know you guys are more intraday, right? But if you're ever interested on the red folder events and what people are really saying, like you can always read this. I put them out every single day, and you know, hopefully it helps. With that being said, I'm going to jump off here. Where were you 10 years ago, brother? Thank you for sharing this. Jonathan, you know I don't know what that says. I see brother. What is this? Like, what's before brother? QSSO. QS. I see queso. Like, are you guys talking about cheese?
Quizzo.
Are you guys talking about queso? Queso, brother. I want queso on my nachos. Is that what we're talking about, Jonathan? Good grief. Tanzerio, I hope, like, you know, like, I hope that you understand that I'm not coming at you. But what I am saying, right, is you're the one. Nobody's coming for you. Nobody's coming to teach you the holy grail of these markets. Nobody's coming to teach you how to be a trader. Most of the people that are teaching how to be a trader aren't licensed, have no business experience, can't even prove profitability through consistent accounts, right? So yes, this looks like hard work, but we just spent an hour doing this, not even an hour, And now this is the historical data that I can now use live price with to make decisions to slam size or to slam trades around, right? Right? And even if you do all this work for 1 micro, right? That 1 micro, motherfucker, is really gonna fuck with me today. That 1 micro will eventually scale into 2 micros and 5 micros and 10 minis and 100 minis, right? Maybe, right? Now with 100 minis, like when you finally do scale up, do you want to make decisions off of stuff like this? Like, let's just go to yesterday. This is the RTH, right? This green line is the 930, right? Do you really want to make decisions to trade your life savings that you work really hard for without having some kind of historical data to line up live price to tell you where you need to be focused on reversals? Are you in a ranging market or are you in a trending market, and how you should be position size? You're not, right? Because businesses don't operate off of just feeling emotion and pattern recognition, right? That's pattern recognition is a part of how people manage businesses, but they always have some kind of data to back their decisions. But with that being said, I'm going to jump. It says what it is. Jonathan, all I see is queso, espresso, brother. You're putting queso in your espresso, and then you're calling him brother. What do you guys have?